Okay. Good evening. An action-packed day on Monday, August 24th. I'm a couple minutes early. I just wanted to sign on early in anticipation of this. It's not even coming up yet. Okay. Good evening. On an action-packed Monday, August 24th. Bear with me a second while I move a couple of wires. I just wanted to make sure that I'm on early. A lot of stuff to talk about, including some news that came out just after literally an hour ago. Rick, thank you for joining us. I'm going to see if maybe a couple of other people join in before we really get going here. The markets had obviously a big push right out of the gate, as we say this morning, off the Trump presser yesterday, where they announced a kind of a breakthrough or significant progress on a plasma treatment for the virus. Stocks were up very strongly. There was some very interesting volatility during the first hour of the day. The Dow held its gains, closed easily at its high of the day, got a big push in the last hour of the day. And a lot of these beaten up sectors like airlines had a very nice day today. Cruise lines were up maybe 8 to 10%. Clearly, the cruise industry is one that would be very difficult to get back anywhere near a profitable capacity without a universal treatment and or virus and or vaccine for the virus. So those stocks did very, very well. Airlines and cruise lines, they propelled the Dow Jones Transports to close, a little bit less than a 2% gain. They went out at 11,150, up about 208 points. That's a pretty good move for the transports. They had a very large move late July, early August. So, other averages. The Dow Jones Industrial Average gained 1.3%. The S&P 500 gained 1%. The Dow did close above 28,000. This was its first close above 28,000 since the beginning of the decline in late February. Of course, the prior close was about 29,555 for the Dow. Still about 1,200 points, 1,300 points away from that. The Dow Jones went out at 28,308, a gain of 378 points. The S&P 500 gained 34 points. That's almost exactly 1%, 3431. Its first close above 3,400 ever. And of course, an all-time high. The NASDAQ composite gained 68 points. Closed at 11,380, up 0.6%, a little bit off its high of the day. The NASDAQ was at one point, I think, well above 11,400, pretty much in the first half hour of the day. I sense maybe some profit taking in the near term in some of the high tech mega cap growth names that have been pushing the NASDAQ much higher. One of the reasons I say that is Tesla had a wild ride today. Tesla traded at above 2,100 right out of the chute, like in the first 5 or 10 minutes of the day. I believe it traded at 2120. It may have actually traded higher. I'm kind of using 2120 as the high. It may have even traded 7 or 8 points higher than that. Um, a little bit hard to tell if those were good trades or not. But at 9:35, it traded at 2120, 5 minutes into the opening, and literally within 45 minutes, Tesla was down 175 points from that level, a 7.5 to 8% correction intraday to $1,945. Um, that to me tells me that that move above 2100 in Tesla set off a few alarm bells with some technical people and some people that have some alerts on stocks that, you know what, I get it. They've got revolutionary technology, et cetera, et cetera. There's now another 4 or 5 electric car companies, aside from even the big three, making a push also. And they were just people, I think, just said, enough is enough. Tesla did recover. It closed off its lows. It closed at about 2015. So that was about a 60, 70% rally off its lows, but it had also traded above 2100. So the rest of the week should be very interesting for Tesla. And also, I feel that we're possibly going to, I feel like some selling in these big mega growth tech names is just around the corner. Excuse me. The Russell 2000 had a pretty good day today after having a very disappointing week last week. The Russell 2000, even on Friday's rally, could not really get anything going that was positive, but it did today. It was up 1%. It closed at just below 1570. That's 1568 spot 50 for the Russell, up just a touch over 1%. The breadth of the market. Oh, here we go again. Look, the breadth of the market last week I thought was horrendous, especially on a day when the Dow Jones was threatening to go through 28,000. The S&P and the NASDAQ closed at a new high on Friday. The S&P got within just a few points of 3,400. The NASDAQ had a nice day. And on Friday, and I mentioned this Friday night, on both the New York Stock Exchange and the NASDAQ exchange, the advanced declines were 2-to-1 negative. There's no way to sugarcoat that. It was just not a good optic from the internals of the market. Now, today, we started out very strong. I watched the advanced decline numbers during the first hour of the day. They were as much as 4-to-1, 4.5-to-1 positive at the NYSE, maybe about 45 minutes into trading. A little bit, maybe about 3-to-1 positive on the NASDAQ. That pretty much faded most of the day, even though the Dow rallied strongly during the last hour to close easily at its highs of the day. Earlier in the day, when the Dow was up 250 points, the advanced decline was much stronger. It closed. Look, they're okay numbers. There's no doubt about it. But the Dow is up almost 400 points, and the S&P is up 1%. The advanced declines were 2170 to 840. That's a little bit less. It's in between 2-to-1 to 2.5-to-1. A little bit less than 2.5-to-1. As bad as the breadth numbers were last week, those numbers could have been better. And on the NASDAQ, which gained 0.6%, You had 1,900 advancers for every 1,500 decliners. That's a gain of, that's less than four stocks advancing for every three. Am I doing that right? Yeah. That's less than four stocks advancing for every three that are declining. I'm just not impressed with that. That's what makes me believe that this selling, you're going to have some selling in some of these big cap tech names. You're going to have some wildly volatile days uh, in those stocks, like what you had with Tesla today. You're going to see that in Google, maybe even Apple, Microsoft, Facebook, maybe even Nvidia. Good earnings last week. Um, and it's just, we're going to, those, they're going to try to shake out the fast money that's in those stocks. Um, so the sectors today, and then we'll get to the big news. Energy, the cyclicals really crushed it today. Okay. Energy up 2.8%. Financials up 2.3%. Financials just a horrendous, and energy also. Both groups horrendous laggards during the last week. Industrials up 1.8%. Materials up 1.7%. All of those four, energy, financials, industrials, materials, pretty much speak to a cyclical rally, which is not something you usually see if the current rally is totally running out of steam. Even though I think the big push from these mega growth tech names might be running out of steam a little bit. I, you've got the industrials and the cyclic and the material stocks picking up steam, and even the financials and energy having a very good day today. Look, for financials and energy, as one day up, one day down, those stocks have been just no momentum at all. They were almost down all 4 days in a row last week. This is just a 1 day move right now. You know, you 1 day does not make a trend. 2 days doesn't even make a trend, but it's better than them going down like they did almost every day last week. So we'll see if there's any follow through tomorrow. So where else are we here? Well, we didn't really have any economic data today, but we did have TSA numbers. And we did have showing, because of course they do an update on the weekend. So we got numbers for Friday. These are the checkpoint crossings at airports, recorded by the TSA, and they put it on their website. And it gives you an idea of traffic at the airports and also basically traffic at the airlines, because you don't go through a checkpoint unless you have a ticket. So the numbers were not really that good. In fact, they were disappointing, because where we have had for the last 3 or 4 weeks gradual improvement on week over week numbers. Different days of the week have different characteristics for flying. Tuesday is the lowest volume day of the week. Wednesday is the second lowest volume. That's why I was going to say travel agents, but I don't even know if travel agents exist anymore. That's why you'll see on websites from time to time that the best days of the week to fly price wise are Tuesday and Wednesday, because those are the lowest volume days of the week. So what we got was Friday, 764,000. That was down 2.5% from a week ago Friday. Maybe it's because it's late in August, but still, those numbers were down, where we have been seeing increases. Saturday, 625,000. A week ago on Saturday, we had 690,000. That's like an 8 or 9% decline on Saturday from what we had a week ago. And Sunday, the busiest volume day of the week, 842,000, down from 860,000 the prior Sunday. That's down 2.5%. So Friday, Saturday was not a good weekend for airline travel. But the airlines rallied today because of all of the information that was disseminated at the presser yesterday that had both Secretary Azar and Han, who's the head of the CDC, talking about this plasma. I'm not really sure if it was meant, if it was a vaccine, and or maybe just a universal treatment, um, going to the next stage with so far some very promising results. We'll see where that goes. Parts of the market that are looking for significant news in that direction, mainly the airlines, were up, maybe 3 to 5%. The cruise lines were up about 10%. 10%. And I mean, the cruise lines have been beaten hard. So the big news of the day was that about a little over an hour ago, there was a headline only story released from the, I'm sure it was on the Dow Jones Newswire, as a Wall Street Journal story, just with a headline that the Dow Jones is making, and maybe you would say the people that own Dow Jones, the Standard and Poor's, the people that oversee the Dow Jones Industrial Average, are making major changes to the Dow Jones Industrial Average. Now, there are 30 stocks in the Dow Jones Industrial Average. It was the first stock average created back over 100 years ago. I don't have the exact date in front of me. And they do not make changes very often to the Dow, but what they announced today was, I am sure, to be timed. The story might be out by now, but it was just a headlines only event with more to come behind it. There are going to be 3 deletions from the Dow Jones Industrial Average and 3 additions. That's 10% of the average. So they are reconstituting 10% of the Dow Jones Industrial Average. I don't ever remember more than 2 changes, 2 stocks out, 2 stocks in at the same time. It's very possible they've made a change of 3 names in and 3 names out before. I just don't recall it. And I think this is probably as big of a change and or an announcement as they've made since, I'm going to say, the late 90s, mid to late 90s, when they put Intel and Microsoft in the Dow at the same time, basically being the first 2 stocks that traded over the counter, not at the New York Stock Exchange, to be included in the Dow Jones Industrial Average. So now these changes, I'm sure, are going to take effect the same day that Apple 4-for-1 stock split takes effect. So why would that be? Well, the Dow is a, let's say, a mathematical, or they're all mathematical. The Dow is a price weighted index. It is not a market capitalization index. Okay. If Apple is splitting 4-for-1, it will have no bearing at all on Apple's placement in the S&P 500. Apple reached the milestone last week of being a $2 trillion company. Uh, so, of course, it's the largest market cap company um, on the planet, probably now even larger than Saudi Aramco. Um, and of course, foreign stocks are not in the S&P 500. So, Apple is easily the largest market cap stock in the S&P 500. It's probably in, I'm not even going to venture a guess how many ETFs it's in. It's got to be in at least 100 ETFs. Um, and it has on a market cap basis, it has the highest impact on the S&P. So, because the Dow Jones Industrial Average is a price weighted average, not a market cap weighted average, with Apple's 4-for-1 stock split, if that was being taken, if that was happening in and of itself and nothing else was going on with the average, that would basically mean that Apple would, and this is going to be about a 10-minute to 15-minute conversation, so bear with me. And if anyone has any questions to ask or please, this is the time to throw something in the chat. So, if Apple would have split 4-for-1 and nothing else would have happened on that day, Apple would have then on that day going forward only 25% of the impact on the daily price movement of the Dow Jones Industrial Average as it did beforehand. Because right now, if you're one stock, a $1 move in any stock, regardless of if it's Walgreens Boots Alliance at $45 or Apple at $500, a $1 price move has the effect of a $6.85 price move in the Dow Jones Industrial Average. Now, all this will be changed, and there'll be a new, what they call a divisor. It's really a multiplier when all these changes take place. So, why is Dow Jones making these changes? Because they want to have a different parts of the commercial world represented somewhat proportionally in the Dow Jones Industrial Average. What's the big criticism that the Dow Jones Industrial Average has from just about everyone who's a market watcher? Well, it's not really representative of the economy, et cetera, et cetera, et cetera. It just doesn't reflect what's really going on in the business world. There's companies that have been in it forever that shouldn't be in it. There's a lot of companies that should be in it that aren't. So, if Apple kind of represents digital commerce, okay, and everything, forget about just the phone part of it, everything involved with digital commerce, okay, and it splits 4-for-1, then all of a sudden the impact that digital commerce, and look, is Verizon in the Dow Jones Industrial Average? I believe it is. But they're a service provider, okay? And Apple's kind of this hybrid tech service provider. They've got this very vibrant app store. Everybody uses either, 99 point whatever percent of the people out there either have an Apple phone or a Samsung phone. I realize there are a lot of other phones on the market. Not 99%. Let's say over 90% either has Apple. And Apple has this ecosystem that once you load up all your music and everything else in there, you're not really going to want to switch, et cetera, et cetera. So, in order to make the Dow Jones as representative of all the different parts of the economy as it was right now before Apple splits, and even to make it more accurately representative of the entire commercial business world, they, with Apple going down in weight by basically, if you own, let's say Apple closed right around $500 today, it's really crazy because it's moved 25% since it announced its 4-for-1 stock split. And keep in mind, the 4-for-1 stock split has absolutely zero impact on markets, on Apple's valuation, or on its market capitalization. So, from a strict fundamental perspective, a stock split should have no impact at all on the price of the stock. It had a huge impact on Apple. It's had a huge impact on Tesla. Now, so Apple's going to be a $125 stock. 4 times 125 is 500, rather than a $500 stock, I believe, later this week when the split becomes effective. It might be Thursday. All this happened so rapidly, and I got so many phone calls and texts and DMs that I couldn't look up exactly what the date was because I wasn't planning on talking about it today. But so now Apple's going to be a $125 stock, not a $500 stock. So if Apple, when it's a $500 stock, would go up 2%, that would be $10. If it would go up 2% as a $125 stock, it would only go up $2.50. And it would have that much less impact on the Dow Jones Industrial Average because it's a price weighted average. So what the Dow is doing, they are taking out ExxonMobil, Raytheon, and let me get this right here, Pfizer. Okay. Now, they are putting in Salesforce, or its company might really be called Salesforce.com, Amgen, and Honeywell. Okay. Now, so Exxon's going out. It's a big integrated international oil exploration, production, refiner, integrated. They do everything from exploration to refining and then selling gas at gas stations. Okay. Pfizer, obviously a big drug company, and Raytheon, kind of a very tied to the aerospace industry, very industrial, a lot of sophisticated engines and moving parts. Now, what about the ones that are going out? All right. How is that going to? I mean, it's got to be to say that the people at Dow Jones did not take moves like this lightly. I didn't look it up, but I'm sure that ExxonMobil and Exxon, before its merger with Mobil, has been in the Dow Jones Industrial Average for, Rick, you're going to help me out with this? I'm going to say 75 years. But look, Exxon's going out. Where does that leave the Dow in terms of its exposure to integrated oils? Chevron is still in the Dow Jones Industrial Average, a major player. I maybe even mentioned a couple of times when we were coming into earnings, they both report the same day. Chevron has maybe even over the last few years kind of overtaken Exxon as the gold standard in that space. And I think the reality is, with oil at $42, $43, oil is half the price that it was for most of the last 15 to 20 years, maybe even a little bit longer. So Exxon's going out, Chevron's staying, and Salesforce. We'll talk about Salesforce for a minute. Salesforce is going in. Salesforce has become this monstrous, extremely well run, wildly successful organization built by his name, is it Jeff Benioff? That it's not really a retail name, but I would say that every big corporation, the corporate world, Salesforce is everywhere. Everybody uses them. It's a software program where it lets you connect with your customers. They can order through you, and there's just, they really got this right from the beginning. They came embedded with a huge installed base, thousands and thousands and thousands of companies globally use Salesforce. It's the gold standard in that realm of the customer integrated software programs with vendors, suppliers, and people that you order from on a recurring basis, et cetera, et cetera, et cetera. And it's just a monstrously successful company that I can see where they're coming from at Dow Jones. I probably never would have put this even on my short list for stocks to go in, but it's everywhere. It's used by everybody. And it is just so integrated with every point and click of global commerce that it makes a lot of sense. And with Apple going down in price significantly in the Dow, Salesforce now is a major component of digital commerce, as Apple is going into the Dow. They've got a very solid history of profitability. They've got very solid history of, being just so embedded with so many companies out there. It's not like they're going to have one hiccup or have one little traffic accident somewhere and the company's going to go away. So the other company going out, Pfizer, obviously, huge drug manufacturer. At one point in time, Pfizer was the single largest institutionally held stock in the money management world by money managers, pension funds, mutual funds, et cetera, et cetera, et cetera, et cetera. Massive successful growth story through the 90s, the 2000s, et cetera, et cetera, et cetera. But look, you've got plenty of representation in that space in the Dow from both Johnson and Johnson and Merck. So look, I'm sure these decisions by the people at Dow Jones. I mean, Apple announced a month ago it was going to split its stock. I got to think that they've been having extremely detailed hour after hour after dozens of hours of conversations among their committee on how are we going to deal with this Apple 4-for-1 stock split. Should we make changes to the average so that we still have a as significant, if not maybe a little bit more, exposure to digital commerce to represent what really drives the American economy today. So Pfizer is out, but there's still a lot of representation in the drug and pharmaceutical world from Merck, from Johnson and Johnson, and on the delivery front from Walgreens Boots Alliance. and from the healthcare front on United Healthcare. So now the other one that's going in, which is a very interesting uh, choice, is Amgen. Amgen is a biotech company. I'm not even going to try to tell you the products that they have or exactly what they do. There's too many, my science and chemistry background pretty much ended in eighth or ninth grade. There's too many 5 and 6 syllable words for me to even try to get into it. But Amgen is clearly the leading biotech company on the planet. Okay. So, it's even for the Dow Jones Industrial, even for the people at Dow Jones, it's a little bit cutting edge to put this uh, to put them in there, but there's a lot of biotech companies that like maybe have some revenue, but maybe really haven't been profitable yet. It's a very speculative space, but there's no doubt that Amgen is the real deal. It's the gold standard in the biotech field, and clearly the first biotech company to be in the Dow. Not that Merck and maybe Johnson and Johnson doesn't venture into some of the biotech areas a little bit, or maybe even have some joint ventures with some of the um, really potentially revolutionary companies in the space. But Amgen, that's what they do. And they're clearly the gold standard there. I think um, it's a very positive sign to see um, them put Amgen in the Dow. Now, the other two stocks, one in, one out, and they're kind of a little bit in the same space in terms of being big industrial exposure to um, heavy equipment, real serious like engines, propulsion systems, jet engines, space program type stuff, uh, defense contracts, and that would be Raytheon going out and Honeywell going in. Now, Honeywell, this makes tremendous sense to me because Honeywell going in, Honeywell has a lot of overlap with General Electric. Okay. There are, I think, at least two um, CEOs of Honeywell over the last 20 to 25 years, or maybe longer, had been very senior executives at General Electric. Maybe didn't get the job when Jack Welch got it in the early 80s. Maybe didn't get the job when Emelt got it in right around 2000, 2001. But, there's a lot of overlapping from the senior, very senior executive positions at GE and at Honeywell. In fact, there was an attempted merger that went on for close to a couple of years, 1999, 2000, between GE and Honeywell. That was going to be Jack Welch's crowning achievement at the end of his illustrious 20 plus year career as the CEO of GE. He was going to do the merger of the century and merge with Honeywell. And it was going to be, a blockbuster deal. And then he'd go off into the sunset as, even more of a brilliant, wonderkind CEO from General Electric that everybody pretty much tagged him with when he left, anyways. That merger did not happen. It was basically challenged relentlessly by the competition committee at the basically what would be the antitrust division of the European Union. And they would not let up, and they would not let up, and they would not let up. And it became clear that they were not going to allow this merger to take place in uh, anywhere within the confines of the European Union. And that basically killed the merger. So, look, Honeywell, GE was taken out of the Dow Jones Industrial Average. They were wildly levered up after the global financial crisis. They bought way too much, too many companies in too many areas that they really didn't have a lot of expertise in. They basically almost had a I say it the wrong way, but kind of a hedge fund going on. They had this GE Financial Services that was involved in just anything and everything you could possibly imagine. Probably a lot of stuff they shouldn't have been involved in. Um, they had Warren Buffett come in and take a big stake at one point in time. I'm not saying they absolutely needed that to save the company, but they had big issues at the depths of the global financial crisis. And frankly, they never really got out of it. You know, the stock is a $6.60 stock today. It was a $6 to $7 stock at the depths of the global financial crisis. It was 13 back in February before things fell apart with this last February, 6, 7 months ago. But GE, they make a lot of jet engines. They do a lot of business with Boeing. They do a lot of business with the airline industry. They make a lot of highly precision, highly sophisticated stuff. They got heavily into healthcare. They got heavily into a lot of areas that maybe they shouldn't have gotten into. And it was too difficult of an unwind, a lot of debt in a lot of different parts of the company. Um, some critics would say that there was maybe a little bit too aggressive um, financial engineering going on from time to time. I'm not really going to comment on that. I don't know enough about it. But they pushed the envelope hard under Jack Welch. They owned NBC very famously at one point in time, long ago. They sold it. They owned the investment banking firm Kidder Peabody back in the late 80s and early 90s. They got out of it after a couple scandals at Kidder Peabody. And so they were always involved in things that weren't necessarily part of what you would call their core business. So before I get way off track, they were taken out of the Dow Jones Industrial Average for just really having just terrible, terrible stock performance 4 or 5 years ago. And I don't even recall at this point in time what was put in. It might have been Walgreens Boots Alliance, unless that was another switch. They got a guy running the company now that might be the right guy, but we're not really talking about GE. We're talking about, the fact that GE isn't in there and hasn't been in there for a while. Raytheon kind of does a lot of stuff that Lockheed does a lot of stuff that Boeing does, does a lot of business with Boeing. Raytheon, I'm sure they're doing business with SpaceX. I'm sure they're doing business with the Virgin Atlantic. The 3 space rocket private enterprises being SpaceX from Elon Musk, whatever the company is called, the symbol SPACE, SPCE, from Richard Branson, which is really a little bit different than what Musk is doing. And also the Bezos initiative, jet propulsion, rockets, space travel. Raytheon's involved in a lot of that stuff. Honeywell probably is too. Maybe not. They don't. I don't know that they do the propulsion systems, but you know, Honeywell just touches a lot of parts of the industrial American commerce. And so it kind of makes sense. So you look, you got three changes. You got big changes. You got four big changes that are all going to happen the same day of the Dow Jones Industrial Average. Apple's going to split 4-for-1. Exxon's going out. Pfizer's going out. Raytheon's going out. You're going to have Salesforce.com going in. You're going to have Amgen going in. You're going to have Honeywell going in. I'm not saying that the Dow is not going to be as volatile as it has been, because these stocks, Amgen can move around, it can be volatile. Salesforce can move around, it can be volatile. But you're going to have volatility points coming from a number of different stocks rather than like from one great big $500 behemoth in Apple. So it will be interesting to see how that index trades the first month, couple months after that. I might try to get some more update on, you know, specifically how that would all break down later in the week. But it's just, these are not changes that are made by the group that oversees this at Dow Jones just on the basis of, hey, I got an idea. Why don't we take these two stocks out and put these two stocks in? It might be interesting. They, they have mercurial research people over there that study, that talk about how much they want to represent. Look, it's the Dow Jones Industrial Average. They want to represent the industrial and all of the commerce that goes on in American industry, maybe X the transportation sector, because there's also the Dow Jones Transportation Average. And the Dow, frankly, has had criticism over at least the last, probably for the last 20 years, that it's not really representative of American commerce to the extent that the S&P is, which, if you're a high enough market cap company and you have profits and to consistently over at least the last 4 quarters, that you can be added to that average. Now, that's not an automatic thing either, and you will note that Tesla, even though it's, I got to say, it was somewhere between 10 and 15 in terms of the largest market cap companies in the world. I was saying that when the stock was at 1,500. Now with the stock at 2,000, it's probably closer to 10 and 15. You will note that Tesla has not yet been added to the S&P 500. Their stock is going to split also. And it will be very interesting to see if in the couple of weeks after Tesla's stock splits, because technically, unless you wanted to challenge their accounting methodology from their last quarterly report, and if you wanted to be picky, you probably could, that they are certainly representative of an S&P 500 company. In market cap, there's no question about it. We're coming into September. Maybe, I know nothing, okay? Maybe S&P would do that coincident with an end of Q3 move, so that when they did a rebalancing, when they do their rebalancing, and they won't do it on the last day of September. They don't want to do it on the last day of the quarter, just in case something happens and then they can't. Maybe on a Thursday, next to last Thursday or Friday of the quarter, sometime in late September. It might be it would probably be coincident with the quadruple expiration so that you have the quadruple expiration in September, because it's a quarterly expiration where you'll have options, futures on indexes, single stocks, anything else, all expire on the same day. And then you also, because we had that in July, right? And then you also have that S&P quarterly rebalancing. I would think that maybe S&P, after Tesla stock has split and trades for a week or so, at some point in time in early September, you might hear that there might be an announcement that Tesla is going to be added to the S&P 500. I'm not saying that as certainly no one should buy the stock on that possibility. The stock has rallied very, very sharply following their 5-for-1 stock split news. And everybody with a financial valuation 101 course certificate will tell you that stock splits really don't have anything to do fundamentally with stock valuation. But taking a stock from being a $1,500 stock to, or a $2,000 stock to being a $300 stock or a $400 stock makes the stock much more easier to own for individuals and makes it trade just a lot more fluidly, to where you won't have 175-point moves from high to low like you did today in less than an hour after the opening. So let's say that was a 175-point move. If you get a 5-for-1 stock split, then that move would be max a 30 to 35-point move. Still a lot, but the price swings that we've had, I like the stock split by I wish more companies would do that. I think you'll probably see more companies do it. It will be a net effect positive to market liquidity, market stability, and also both in terms of Tesla stock. So look, we went over a lot. It's about 10 minutes to 8. We got a couple interesting pieces of economic news coming tomorrow. We're going to have FHFA housing price index. We know that's going to be up. When we had the existing home sales report a week ago, prices were up from 4% to 11. There's 4 different regions of the country. They're up 4% in the Northeast. They're up 11% in the West, 8 to 9% in the South and Midwest. That number is going to be high. Case-Shiller Home Price Index, that's going to talk about 20 cities. I believe it's actually 20 metropolitan areas in the country. You're going to have some sharp increases. You may, I don't know to what degree it will include, like the big variation has been the big dichotomy for real estate pricing has been prices down in the cities where people want to get out of because of the rioting and the violence and all the craziness, and the mayors that are just lost and really don't know what to do, or are doing it on purpose because they're really have Marxist tendencies. And the people going to the suburbs, those are the people that are really getting whacked doubly, because the price, if they own something in the city, that's down 15%, maybe a little bit more. And if they're trying to buy something in the suburbs, I know this from talking to people, those prices are probably up 15%. So Case-Shiller, they'll talk about 20 metropolitan areas tomorrow. I want to see comments from them on cities versus suburbs. And then we'll even have new home sales tomorrow also, just to really load it up on the housing and home building front. And we'll have a conference board consumer confidence number. We get the conference board confidence number once a month, where the University of Michigan number comes out. They give you one revision later in the month. So that's kind of it. That's all I have. I just want to mention I'm still dealing with this thing where the chat here, I don't get any comments in the chat. I see a couple people in the chat on my YouTube feed. But if you are in Periscope, Ellie, if you're in Periscope and you're trying to talk to me on the chat, I don't see any comments from Periscope in the chat. The only place I will see comments from in the chat is from if you're logged in watching on YouTube, which is better anyways because the transmission is usually a little bit better in YouTube. So look, that was a lot. Big news on the changes in the Dow. I tried to give you a little bit of a history, combo history, and what their current thinking is in terms of making these changes. It's all got to do with the Apple 4-for-1 stock split. Not that some of these changes on a one-off weren't maybe warranted anyways. It gives them an extra little nudge to do it. I, I Stocks had a great day today. The internals are still significantly underperforming, although I was very happy to see the Russell up 1%. I'd like to see a day where the advanced decline lines for both the NYSE and the NASDAQ improve a little bit. It might take a week or so for that improvement to carry through. We'll see how the market reacts tomorrow to Dow Jones 28,000 plus. And other than that, everyone have a nice evening. This is the Anderson Report. I am Tim the Source Anderson. If you are new to my broadcast and you are watching on YouTube, please hit the subscribe button. You can also hit the little bell next to the subscribe button and you'll get notifications on when the next broadcast will be. If you like the program, please give it a like. This also is broadcast on my Periscope channel, TJ Anderson 12. If you have any questions after the show, you can come at me on Twitter. My handle is TJ Anderson 1. Or you can put comments in YouTube, and I will make a point to look at them. So I'm sure we will be back to you tomorrow at this time frame, 7 o'clock. And everyone, please have a nice evening.